Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
TV18.
Hello and welcome to Halftime Report. It's 12 noon. We're halfway through the training session. I am Reema Tendulkar. With me is Nigel D'Souza, and it's a subdued day across the regional markets. So we're down close to about 0.7%. The mid caps are underperforming. The advanced decline ratio is weak. Currently, we've got about 2 stocks in the green for 5 stocks in the red. But if you look at the regional markets, it's straight away 2% gone on the Japanese markets and the Korean markets, as well as the Chinese market, as the trade war threat continues to loom. A lot of individual names are getting hit quite badly. So Adani Enterprises is down nearly 8.5%. Many in the commodity space are taking it on the chin. So JSP and NALCO looking weak, cuts of nearly 7 to 5.5%. So clearly a weak day of trade as we start the second half of this calendar year.
Absolutely, Reema. As you said, the first trading session of the series was good. That was always a bit of a worry. But with the Chinese market down close to around 2%, that's a big worry. I'll tell you why. Because, a lot of the stimulus that was being injected by the ECB as well as by the Fed, that seems to be turning around. And now you have suddenly the Chinese central bank that's going in there and infusing capital and weakening their own currency. So that's a worry, and that explains why, in fact, the metal stocks are seeing pressure. Because what will happen out there is that they will ramp up capacities in China if the yuan weakens further to around 6.7, and that will put additional output in the broader markets. And that's what really is hurting sentiment today. And that's why the Shanghai market is under some pressure. As we speak, the Nifty is down 75 points, but we have been down 75 points for close to around 2 hours. So good to see that we're not seeing any incremental losses. We'll wait for the European markets to open up now and see if we can fight back maybe towards the 10,660, 10,670 odd mark. The 50 DMA comes in at around 10,692. So that's a level that's at least 50 points away from current levels. Keep an eye out on that front.
On the Chinese markets, also on Friday, the US tariffs on Chinese imports comes into place, and the street is going to watch about any retaliatory measures coming forth with respect to the trade war. So that is an additional.
Absolutely.
These are movers and shakers at noon, and on top of that, we've got Tata Steel, some debt relief coming through after they've signed their JV with ThyssenKrupp. Nigel? That's
right, Reema. The stock has seen a lot of profit booking from the high point of the day, but this news is positive. Remember, they had signed an MOU in September 2017, and then there was a fear that there'll be change in some of those details of that JV. Now, over the weekend, they've gone ahead and signed a definitive agreement, so that's a move in the positive direction. Why is that? The street was fearing that maybe they'll transfer less debt to this JV. That's not happened. The only change really is that in case of an IPO, ThyssenKrupp, they have they have the right, the affirmative right in terms of the timing, and also they'll have a higher share in terms of their IPO. So ThyssenKrupp's share will go to around 55%. That compares with around 50% earlier. The debt as well, they'll be transferring the same amount. 2.5 billion euros is what Tata Steel will transfer. Thyssen will transfer nearly around 4 billion euros. If you just to give you a picture of what the pro forma sales will look like, it'll be roughly around 17 billion euros with an EBITDA number of around 1.5 billion euros. Now, you'll add to that nearly around 500 million euros because that will be the synergy benefits that will play out. How do they get this? They're talking about, cost savings, admin savings, as well as purchase savings. So that's the broad details that they've given. They're talking about ending this particular JV in the coming year itself. That's in this fiscal. Brokerages, they're very, very happy. Firstly, because they're not transferring less amount of debt. And secondly, there were a lot of concerns. All those concerns, they seem to have put to rest. Credit Suisse, they have an outperformed rating. 860 rupees is the target price. The JV terms are better than earlier feared. CLSA as well, they are saying, signing of the JV will assuage a lot of fears that were there on the street. While at Jefferies, they're a little bit cautious because they're cautious on the recent acquisitions that they've done. Bhushan Steel as well as Bhushan Steel and Power. So that's the reason they're a little bit cautious. And Investec as well, they have a buy rating, yes, but their target price a tad bit. They're fearing a bloated balance sheet. Stock has seen a correction of nearly around 4% from the high point of the day.
Okay, the merged entity will be Europe's second largest steel company. Stock is coming for profit booking. Anyway, as Nigel said, the entire commodity basket is under pressure today. But it's the start of the month and auto sales numbers have come through. Sonia, looks good for the month of June on the whole.
Yes, it does actually. And in fact, you know, the best of the lot this time is Bajaj Auto, and that's why the stock is up and about quite a bit. So let me quickly run you through the numbers. This time, total sales growth of 65% for Bajaj Auto. It's really the exports that are firing quite a bit for Bajaj Auto. The management told us that not just traditional markets like Nigeria, but the newer markets like Ghana, Iraq, etc. are doing quite well. Even if you look at the motorcycle segment, it's a 65% growth. They did say that they've picked up motorcycle market share. So Bajaj Auto looking pretty good. Apart from that, if you look at Maruti, the numbers were pretty good given that they had 7 days of a maintenance shutdown. Despite that, they saw 36% growth at 1.45 lakh units. Yes, it was less than what they did in the last few months, but as I said, there was a shutdown, so you can't compare it month on month. For M&M, the auto sales look pretty good. 26% growth is what they've seen. Although their SUV or the utility vehicle segment has fallen a bit, the commercial vehicles have done pretty well, a growth of almost 27% there. Talking about commercial vehicles, even Tata Motors numbers were pretty good. Ashok Leyland did quite well. For Tata Motors, it was a 50% commercial vehicle growth. Passenger vehicle sales growth was up 63%, and these were higher than Nomura's expectations. Finally, Ashok Leyland, the total sales growth was 28% year-on-year. Medium and heavy commercial vehicles went up 22%, and at 15,791, not only is it higher than the expectations that Nomura had of 13,900, it's higher than the last 2 months. So April and May, they did 12,000 and 13,000 respectively, and in June, they did 15,791. So looking pretty good for the commercial vehicle sector.
Nigeria has rewarded us with the highest growth in terms of motorcycle exports. For the first quarter last year, it was about 39,000 vehicles totally. This time it is 104,000 vehicles. So that's been outstanding. For now, I can only say that in the first quarter, we've recorded a 31% growth overall in exports at about 540,000 vehicles. This is our highest ever quarterly exports in the history of the company. If you were to simply extrapolate it, it suggests that we should be hitting something like 2 million at the end of the year. It is better market share, especially with motorcycles. Just to make the point that both on domestic motorcycles and domestic three-wheelers, we have our highest quarterly sales ever. The good news is that for the quarter, we have an improvement of 40% growth, which is again, I think, way ahead of industry growth. So we are certainly gaining share there.
Well, a lot of stocks in the news today. So let's go across to Sonal. She's coming in after a vacation. Hey, Sonal, fill us in.
Thanks a lot for that, Nigel. I'll start with Coal India. The company has reported its offtake numbers for the month of June 2018, and it has come in higher by around 8.5% at 49.6 million tons. That stock is buzzing in trade today. MOIL has also increased the price of ferro-grade, SMGR, chemical grade and fines by 5%. Also, it has increased the price of electrolytic manganese dioxide by 200 rupees per ton. That stock is in focus in trade today. Thermax has also won an order worth 340 crores from an Indian steel major. Welspun Enterprises is also in focus because the company has received provisional certificate for commercial operation of the Delhi and Meerut Expressway. Other stocks that are buzzing in trade today are the Adani Group stocks because the promoter is planning on raising around 5,000 to 6,000 crore rupees by selling off some stake in its group companies. Those stocks are buzzing on the downside. Back to you.
All right, thank you very much for that. And it's been a stellar listing for RITES, which is the railway consultancy. It had a great subscription, close to about 67, 68 times. And today, as we speak, the stock is higher by close to about 12%. We spoke to Rajiv Mehrotra, the CMD of the company, on the margin and the growth outlook of the company going ahead. Listen in to what he had to say.
We have been, maintaining overall margins of 30 to 32%. And of course, with some minor changes, we have been able to maintain this. On the turnkey, overall basis, turnkey is about 50% of our order book. This year, if we see only the turnkey portion, which is on nomination, aggregates to 1,400 crore rupees. With the order book of 4,818 crores in hand, we believe that this growth rate can be maintained or accelerated. So we plan to come out with the quarterly results sometime end of this month. and then we will talk also about the next year's growth.
Well, here's a quick recap of all the buzzing stocks that we have. We have Tata Steel auto stocks like Bajaj Auto, Ashok Leyland, as well as Eicher Motors. New boy on the block, we have Rates, Coal India, Moil, Thermax, as well as Welspun Enterprises, and Adani Group stocks like Adani Enterprises, Adani Ports, as well as Adani Power.
Get into a break then. On that note, on the other side, Thermax on our radar. We'll get chatting with MS Unikrishnan, the MD of the company, on the other side on a recent order win. Stay tuned.
Well, markets have moved to the sessions low, and it's not just the frontlines that are seeing selling. Even the other high beta stocks, something like Allahabad Bank is now down nearly around 6%. Reliance Infra seeing some selling, and Reliance Communications as well has moved to the low point of the day. So not looking too good as we speak. But on that note, let's get into market opinion then from Pramod Guppi of Ambit Capital. He says that the trends in the global markets have led to a significant appreciation of the dollar. Adds there is some value emerging in individual stocks.
After 2017, I guess we had to expect some sort of mean reversion, consolidation in the markets. So obviously some sort of profit booking was on the table, but I guess it's coincided with the sort of trend that we've seen in global markets in terms of both the tightening liquidity and the trade wars, all contributing towards a significant appreciation in the dollar. Alongside that, we've seen the sort of repositioning of the local funds away from small and mid caps to large caps. So although on a stock-specific basis, you are seeing some sort of value emerging, but I think given the sort of momentum on the downside, we may not have seen the bottom in that space. So I guess that trend is likely to continue, where we'll see broadly stable trends at the large cap index level, but continued pain in the small and mid cap space. If the currency markets continue to take a beating, and that feeds through imports into our own domestic inflation story. So the impact on fundamentals is through that route rather than any direct exposure to trade wars. Local macroeconomic triggers also look negative. Emerging market flows, trade wars, negative. Potential sources of political uncertainty as we see some of the state elections coming through. Again, not particularly great from a volatility standpoint. In an election year, fiscal deficit is also a thing to watch out for, which is not looking great, particularly given where crude and the rupee are. A combination of both can put more pressure on that.
All right, moving on to our corporate radar then. Thermax is a stock on our radar after the company wins a 340 crore order. This order is specially designed boiler, electro, turbo generators and ancillary equipment for their production facility in Maharashtra. MS Unikrishnan, the MD of the company, joins in now. Good afternoon, Mr. Unikrishnan, and thanks so much for joining in. First, 340 crore order win. What would it take your order inflows in the first quarter of this financial year and the pipeline as you see it? Have you won even some large orders, or do you foresee winning some large orders too?
Rima, I am at a silent period to give you the real numbers for the quarter, but let me talk about this order in itself. It's a larger project order that you received in the first quarter. Well, this will be executed across the next 21 months period. This will be the largest blast furnace gas-based power plant, where it will be generating 175 megawatt of electricity from the waste gases that will come from a steel plant, which will be converted into steam with a very, very specially designed boiler, which again will be the largest capacity blast furnace gas-fired boiler going to be created in India. Very interesting part about this is that a good part of the steel plant will be coming from an outside country, whereas this very crucial equipment is going to be manufactured in India, and we had to be having global competition phase for this. That's about the win.
All right, Mr. Unikrishnan, sir, if you could give us an idea, what was the order inflow in the last year, and this year, what kind of an order inflow are you expecting? That's for FY19.
Nigel, last year Thermax Group had a 6,300 plus crores order intake, and Current year, the way we are seeing the inquiry pipeline, both in the domestic market and the international market, we should be able to have this kind of similar kind of numbers expected. Please remember our order intake was higher by almost 63% last year. So even matching up with the same number in the current year will be a great achievement. But we are targeting similar kind of numbers in the current year. We are not seeing that kind of attraction in the Indian market. Since you're globally present, including global orders, we should be able to come closer to what you've done in the last year.
Okay. So, small and mid-size orders are still coming in, but in your previous interaction, you've indicated that inquiries for large orders are still not coming through. Has there been any pickup on that front?
Very large projects are not on the anvil at this point of time, barring couple of refinery projects which were being spoken but not ordered out, or inquiries yet to be issued. See, the sectors which can give large size orders in the country, domestic market, are power sector, steel sector, cement sector, fertilizer and oil and gas. These are the 5 largest sectors for capital goods companies in the country. And in that power sector, it's better that I don't talk about much about it at this point of time, because thermal power orders are not going to be happening at all, at least for some more time, large in numbers. Second is the steel industry. There were 2 projects on the anvil. One is that we've received, which is JSW. Second is Tata Steel-ThyssenKrupp. These 2 are the expansions expected in the current year, and people are waiting only for the NCLT activities to be over for taking over the stress assets. So I would believe the current year will again go without any further ordering in the steel industry than what has already happened. And then comes to oil and gas. There are 2 refineries which are on expansion mode, both Bhatinda as well as Balmer refineries. I don't know why people are delaying the ordering for it, because the automobile production is really going up in the country, and the petroleum demand in the country is also going up. So ideally speaking, the gestation period for a refinery project is not less than 3 to 4 years if you have to order out right now. I presume they should be happening any moment in the current year itself, or else beginning of next year. Fertilizer, all expansion projects most of them are ordered out, so nothing is going to be expected in the immediate future. Cement will continue. I have a feeling that the next large size orders which are going to be concluded in the country will be coming from cement units, because cement consumption and maybe capacity utilization also going up. Good number of cement companies in the country are touching 75+% capacity utilization. The moment they cross 80-85, they'll start reordering for maybe for capacity expansion. That's about the entire story for projects which are going to happen in the country.
All right, Mr. Unikrishnan, if you could give us a sense of what is the current capacity utilization levels, and also, you have a couple of capacities that are coming on stream, I think at Dahej as well as at Andhra Pradesh. So what's the progress there?
The Dahej plant is commissioned in the last year itself, and it has almost reached 44% capacity utilization at the end of the first quarter, near to. We are expecting that to be going up further, and we should be able to at least fill that factory by 65-70% in the current year. And that itself is going to be a fair achievement for the organization. And next one is, because the chemical factory coming to a 2/3 capacity utilization the first year of operation will be a great achievement anywhere in the world. Now coming to the Sri City, southern part of India, that factory which is going to be manufacturing absorption chillers, a very specialized product, which would also be exported a lot from India. That factory is readying. In fact, factory construction is completed. The machineries are under installation. Trial production should start sometime in the Q2, and I would expect it to be stabilized as a manufacturing facility in the current financial year itself. Then we had a third premises which was commissioned last year. That's an engineering factory in Indonesia. I'm very happy to inform you that orders have started coming in. Manufacturing is picked up fairly well in that facility also. So these were the 3 manufacturing facilities Thermax Group has put in the last 2-year period of time.
Sir, many of the core sectors in the last 5 years or so, power, steel, cement, have all dried up. And on account of that, to de-risk the business, you have spoken about entering into new geographies as well as new segments, absorption chillers, targeting commercial customers, rooftop, solar rooftop, the water business, which has now turned profitable for you. So you are looking to de-risk your business. What is the kind of capex that you've outlined for all this, and how will it affect your return on capital employed?
Well, thankfully, we are a zero-debt organization and still having a fairly strong treasury. So capital generation is not a problem, but the capital allocation normally we as a company are looking forward to progressively going back to what we were earlier, upwards of 24% ROC is what you're looking forward to. And we may not have to go to we will not have to go to the market for the growth plan that you already made. Capex plan numbers, in the next 5 years, Thermax will be investing 1,500 crore to ensure that we are able to have all the growth engines, growth plans that you've committed are supported, and all that will be from the internal accruals, whatever plans that you made.
All right, final question, sir, before we let you go. FY19, what kind of growth can we look at? You told us the order inflow is quite good. What kind of a top line growth are you looking at, if you can give us a range? And also a brief outlook on the margin picture.
Well, normally I don't give a guidance in terms of numbers, but having opened the year with a 43% more carry forward orders into the current year, a double-digit growth is what we are expecting, which will be there. I mean, we'll certainly deliver it. Margins in the capital goods industry has not started improving, and I don't expect an improvement beyond a level because the market hasn't turned into a seller's market. So the orders which are getting concluded are done at a very tight margin. Normally during execution, Thermax improves the margin, so that we are aiming for towards the year end. Normally we will also like to have a double-digit margin percentage. It will be a bit difficult, but we'll struggle to face a challenge and make it happen at the end of the year. Quarter over quarter it may not happen, but in the full year we are wanting to target for a double-digit profitability for the organization at EBITDA level.
Okay, double-digit revenues as well as EBITDA for FY19. You spoke about a 24% target for your ROCE, return on capital employed. What does it currently stand at, and the time horizon to achieve this target?
Well, Thermax's ROC is around 17% at this point of time. That's a composite ROC. The business ROC is already at 24%. It's on account of the fact that we have got a fairly strong treasury around, at this point of time, maybe 1,200 crore size, which cannot earn anything more than maybe a 5-6%. Unless we invest the money into manufacturing capacity or buying companies, ROC will continue to be in late teens. It will start rising as we start investing that money into capacity creation. Capacity creation we are doing, but we are very judicious and we don't run after ROC because business is already making, as I mentioned, about more than 25%. And that's the area that we are targeting where it's a wise investment. So that's the kind of numbers that we're currently at.
All right, Mr. Unikrishnan, thanks so much, sir. Always a pleasure talking to you. All the best for the remainder of this year then. By the way, just keep an eye out on the markets. We have moved to the low point of the day. The selling is really getting a little more intense now as we speak. We're down close to around 95 points. A couple of stocks have moved lower. Yes, the metal stocks are losing. They continue to lose. So Vedanta and Hindalco, they have moved to the low point of the day. And in addition to that, I think a couple of these larger banks are seeing some selling. HDFC Bank, that was a relative underperformer even in Friday's trading session, but the markets managed to end in the green. So let's pull up the intraday chart there. I think ICICI Bank as well has taken a leg down, so that's not good news. Yeah, HDFC Bank, big weight on the index, big weight on the Nifty Bank. When that moves lower, that definitely drags the index. So let's do one thing. We'll slip into a short break. You come back, we'll have Ashwini Gujral as well as Prakash Gaba with us. They'll tell us how to trade the Nifty.